As the entire market rises, these areas will rise. Most investors would think it's risky to go there, but that could also be the opportunity too. You'll find that rental yields are fairly high in these suburbs. These lower priced properties are going to definitely get a push. When you're looking at a market, keep track of these. Most investors chase the same data, where markets have already boomed, prices have already taken off. But the strategic ones, they want to understand market signals and they want to get in before this data starts moving. And so that's exactly what I'm going to talk about in this video. I'm going to talk about 4 key market trends that's going to give you some indication that the market is about to turn before it shows up on your data, like days on market, stock on market, vacancy rates tightening, etc. So we got to be early. And how do we spot these early signs? That's what this video is about. So if you're interested in this type of thing, watch till the end of the video. Hi, for those of you who don't know me, my name is Jadoo Srikanth and I'm a buyer's agent for property investors. I've bought property in every state in Australia for my clients using a data-driven approach. So if you want to work with me, then go to my website, propertyframeworkbuyersagency.com.au, and book a session with me there. We are going to talk about 4 key market trends. And why are these trends important? Because today I see everyone has access to the same data platforms. They have access to Hedgetag, DSR data, and so many other data platforms. And they're all pointing to the same kind of markets. So every other investor is now going to those markets, and even the buyer's agents, they're all going into these hot markets. So how do we look at markets when they are cool and they're just about to turn before it even shows up in the data? That's what I'm going to talk about. And why is it important for us as an investor? Because we want to get in before the heat really starts. We want to get in early, but not too early at the same time. And that's why we got to understand the signals. That's what I'm going to get into. So let's get into this one by one. So the first one is the ripple effect. So let me clarify what the ripple effect is. Now, most people, usually what they think about the ripple effect is you have suburb A and then you have the adjacent suburb B, which is next to it, where suburb A is picking up, it's an expensive suburb, and you have a cheaper suburb B behind it. So they think that, the cheaper suburb B is now going to catch up with suburb A. That's the understanding of the ripple effect. But let's take it a bit more broader. Let's go on a state level. And I want to give an example here. Okay, so let's go back to regional Queensland 2023-2024. I briefly spoke about this in my other videos, but let me touch on this again. In 2023-2024, we were seeing a really heated market in areas like Rockhampton and Townsville. It was a time that these markets were taking off. There were multiple offers on properties, like each property would get about 10 offers, and properties would sell about 50, 60, 70,000 above the asking price. Not ideal for you as an investor to go into these markets. So on a state level, which are the other markets that have somewhat of a similar economic composition as these markets, have similar housing stock, which are somewhat tight but really haven't taken off to these levels? So let me screen share here to give you some examples. So here I have Rockhampton. So Rockhampton is just over here. This was the market that was really taking off around that late 23, early 2024. We were seeing prices shooting up really rapidly in all the suburbs in Rockhampton. And then if you go into Gladstone here, this market was tightening, but prices weren't accelerating at that point around 2024. You could still buy around the asking price. It wasn't a cool market. It was tightening, but you could still buy stuff around the asking price. And we were seeing the trends there, that the market was tightening, and it was not too far away from something like a Rockhampton, and it was very obvious that this market was the next one to be picking up. So even on a state level, like Rockhampton, Gladstone, similar type of population, similar housing stock. Gladstone does have, somewhat of a better quality housing stock, and the prices are kind of much more affordable there. So that was probably why the ripple effect happened. The heat transferred from Rockhampton and they moved into Gladstone, and then what happened next in Gladstone around 2024. Prices just shot up. The same situation that was in Townsville and Rockhampton then moved on to Gladstone, and it just shot up. So what am I trying to get at here? So when we see hot markets, so we're not going into Gladstone and Rockhampton now, but let's apply to the markets that we are buying in right now. When we are seeing these really hot markets, what are some other similar markets that could be maybe in the vicinity or maybe 100, 200 kilometers away that have a similar economic composition, maybe better quality housing stock, the affordability is better? Where is that ripple going to play out next? So if you can think along those lines, then you're going into markets before the data is showing up there. Even sometimes on a suburb level, I just want to share some other examples here. Now, if you go to Rockhampton, like in Rockhampton, like areas like Frenchville, Norman Gardens had already taken off. They were moving up rapidly and everyone wanted to buy something in Frenchville and Norman Gardens. But Gracemere was kind of overlooked. It was a suburb that was outside, maybe about 20 minutes outside of Rockhampton. You could still find properties, new homes sitting around 350 to 400,000. But there wasn't many people buying, thinking that, oh, it's outer Rockhampton, it's not going to pick up. But what tends to happen is that as these bigger regions pick up, these regions will follow, like areas, the suburbs that are, like 20, 25 minutes away from the major regional center, where you still have affordable stock, good quality stock, that will follow. So you still can buy well and get good quality properties. If you go to Gladstone, I can give a similar example in Gladstone as well. Inner Gladstone was picking up, but then we had outer suburbs like Calliope, which was much more affordable than the inner suburbs. So if you can get into these more affordable suburbs, like even though they are away from the main CBD area, there's still potential in these suburbs. As the entire market rises, these areas will rise, and the advantage for you is that you can buy at cheaper price points and then get the same level of growth that these suburbs closer to the CBD experience. So that's how you kind of spot these ripple effects. So there are two types. I'm talking on a state level. If you can look at regions which are similar to each other, where one has taken off, one is lagging behind, you can go into those markets. And then the second type is within that region, there could be a suburb that's a bit isolated, standing out. Most investors would think it's risky to go there, but that could also be the opportunity too. So look out for these opportunities. Let's move to the second point, and that's about rents. Okay, so when we see a market where rents are rising but prices are stagnant, that's an early indicator that price pressure is going to build up here. Let's say the rental growth in this market has outperformed price growth for the last couple of years, or maybe even 1 year. That's a very good sign that there's going to be activity in this market. So let me give you some examples. The very most recent one I can think of is the Melbourne market. Around that 21, 22, 23, there was no growth in Melbourne, prices were stagnant, but something was happening in the rental market. Vacancy rates were dropping and rents were increasing, but prices were stagnant. And now we are seeing in 24-25 that being transferred onto the sales market as the rents have risen and the pressure being transferred onto the sales market. I can give you another example. Adelaide, before it boomed around 2021, rents were starting to rise around 2019, 2020. So rental pressure was building up as more population was going in. There was not much investor activity, so there was not much rental stock available. So rents were rising, and then eventually people will get to a point where they feel that it's cheaper to buy than rent. That pressure eventually translates onto the sales market. That's an indicator that you could watch out for. Look out for suburbs where rents are rising rapidly, but the sales market hasn't caught up yet. So these are potential suburbs that could take off. So you'll find that rental yields are fairly high in these suburbs where the rents haven't compressed as yet. These are the potential areas that you should be looking for, where there could be more opportunity ahead. So that's the second point. Now I want to talk about a really important point that's so relevant in 2025. That's the price to replacement cost ratio, right? Now we in 2025, we live in an environment where construction costs have gone up. It takes longer to build a home. Let's look at the ratio between the price of an established home and the price it takes to buy land, build a house on it, and also you have developer margins on top of that, the total cost of that. So let's say the cost of an established home is much lesser than the cost of building a new home, including developer margins. If this is much lesser, then developers don't really see any incentives to build in that area. they won't build properties in that area because they won't see profits. So what will happen is that there's a supply crunch. Supply starts reducing in that area. These older properties that are much cheaper would start facing the pressure. And those properties have no other way to move that rather than upwards. I'll give you just a very quick example, something that could be relevant in 2025 as well. Geraldton was one of the markets that we were buying back in 2024. If you look at Geraldton, you have suburbs like Rangeway, Kalu, Uttakara, where you can still find 3x1 houses anywhere between 350,000 to 400,000. So decent houses, brick houses where you can find them at that price point. And then you have new stock that's coming up in the outer suburbs that's selling for like 650,000 or even higher. So there's a huge difference, like 400,000 and 650,000. There is that gap there created between a new one that's coming up and the established stock. So developers, because prices haven't risen as much, development activity isn't going to be very significant in that region, and therefore the affordable stock, the $300,000-$400,000 stock, as more and more buyers come into the market, those will start getting soaked up and those prices will start rising. If there's a big gap between the new builds and the established houses in that area, that storm is going to come in, that those houses that are priced lower are going to be pushed up. There's no way they can remain at those prices. That's definitely an advantage. Okay, if you can spot those markets where there's a gap between the older properties and the new builds, these are areas where there will be a supply crunch, and when the demand picks up, like when we have now, where there's first home buyer schemes and things like that, when the demand starts picking up and more buyers enter the market, these lower priced properties are going to definitely get a push. So look for those type of areas as well. That's going to help you find good quality areas. And now let's move to the final one. I think one of the other indicators is that when a market is about to turn, sometimes when you see that upper segment of the market, so let's say a suburb has older properties sitting around 500,000 and it has more premium kind of properties sitting around 750, 800,000. And now in that suburb, we are starting to see that the days on market and the time to sell a property, basically for the upper end, is starting to change. That is starting to tighten and those properties are starting to sell faster. Now that's already an indicator that confidence is returning to the market and there's going to be momentum coming back into the lower segments of the market as well. In a cooler market, if you start to see that the more priced properties or the more expensive properties, or the ones that first home buyers like, or the ones that a premium, I would say, those type of properties which are well located in good school zones, appear really nice. If those properties are selling faster, then it's an indication that the lower end segment of the market is going to catch up within the next 6 to 12 months. So if you buy in the lower segment of the markets at that time, you will have that price pressure coming up in the next 6 months and those properties will kind of move forward. So always when you're looking at a market, keep track of these more expensive properties. Are they starting to sell? And I can certainly see some suburbs, in regions in Victoria where this is playing up, where I can see more expensive stock starting to sell more quickly, whereas the older stock is staying on the market for longer. So these are some of the things that you could look for instead of just relying on data. When you see these market signals early, then you have a potential to get into some good markets and get the benefit of maximum capital growth. So I hope that was useful to you. Please like and subscribe to the channel and I'll see you in my next video.